Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex world of business one filing at a time. Today we're diving into whether a company is about to get the boot from a major stock exchange or if they can pull a rabbit out of a hat. Let's jump right in. This is Avalon GloboCare Corp, and it looks like they've got some serious explaining to do with the Nasdaq stock market. So, it seems like back on the 19th of November of 2025, Avalon GloboCare got a letter from Nasdaq. This letter wasn't exactly a pat on the back. It basically said they're not following the rules for staying listed on the Nasdaq capital market. The big issue here is something called Listing Rule 5550 Baibon. Now, this rule is all about making sure a company has enough financial muscle, basically. For Nasdaq capital market, you generally need to have at least $2.5 million in something called stockholders' equity. And here is the kicker. In their report for the period ending the 31st of March 2025, Avalon GloboCare reported a stockholders' equity of negative $3,891,270. That's a big fat negative number. Folks, they are not only below the required minimum, but they are in the red by almost $4 million. Nasdaq also has other ways a company can prove it is stable, like having at least $35 million in the market value of its stock. Think of it this way, if a company's stock is trading high and lots of people own it, that shows confidence and value. Avalon GloboCare didn't meet that either. Another way is to show consistent profits. They needed to show $500,000 in profit from their ongoing business operations, either in the last year or in 2 out of the last 3 years. And that's also something they weren't able to do. Now, this isn't the first time they've heard this news. Back in May of 2025, they got a similar warning. At that time, Nasdaq gave them an extension, a whole 180 days, which means they had until the 18th of November 2025 to fix things. But as the November letter shows, they didn't fix it in time. And here is the dire consequence: unless they do something very quickly, their stock could be suspended or even delisted. That means people wouldn't be able to trade it on the Nasdaq anymore, which is a huge blow to any company. So what's their plan? Well, they say they are going to ask for a hearing with the Nasdaq hearings panel. This is like asking for a second chance, a chance to argue their case. The good news is, asking for this hearing basically pauses any delisting actions while they wait for the panel to make a decision. This report is signed off by Luisa Ingagiola, the Chief Financial Officer. It's her job to make sure the numbers add up and that the company is following all the rules. Alright, so what does all this really mean? Avalon GloboCare is in a tough spot. They are not meeting the basic financial requirements to stay listed on a major stock exchange. This usually signals underlying business problems like not generating enough revenue, burning through cash too quickly, or facing significant market challenges. The fact that they've been given extensions before and are still in this position suggests the problems are deep-rooted. The immediate risk is delisting, which would severely hurt their ability to raise capital and could cause investors to dump their shares, further tanking the stock price. They are essentially on life support in terms of their listing status. Looking ahead, their success hinges entirely on convincing the Nasdaq panel that they have a solid, believable plan to turn things around and meet the listing requirements. Without that, their future on Nasdaq is very uncertain. It highlights the importance of financial discipline and consistent performance for any public company. Now, looking at these results more broadly, Avalon GloboCare is clearly struggling. Their negative stockholders' equity is a red flag that points to a company that has lost more money than it has earned over time. This isn't just a temporary dip, it suggests a fundamental challenge in their business model or market position. If they can't demonstrate a clear path to profitability and positive equity, staying on Nasdaq will be an uphill battle. So what is our bottom line? Avalon GloboCare is facing a make or break moment. Their financial health is shaky, and their ability to stay listed is in serious doubt. Investors should be extremely cautious. The company needs to prove it can generate consistent profits and rebuild its equity base. Or it risks being removed from a major exchange, which would be a significant setback. Alright, that is our breakdown of Avalon GloboCare's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out the Discord in the description below, where we go even deeper into these topics. Thanks for watching, see you next time.